This is a graph of US oil reserves over time and how much they have been drained over the last year. This Strategic Petroleum Reserve, or SPR, is a stockpile of oil that is designed to only be used in emergency situations. However, over the course of 2022, this reserve has been drained by 34%. Now, this is a rather alarming rate of decline and has taken the number of barrels of oil in reserve from 593 million at the start of the year to now just being 392 million. So America's decision to tap into these reserves has artificially softened the blow of the energy crisis that has been brought on to many Western countries this year, and that is because the release of this many barrels of oil has undoubtedly suppressed the price of oil somewhat this year, allowing the US to use barrels they already have rather than having to pay the high market price right now to import them instead. However, the US cannot continue to rely on taking from this reserve forever, as eventually they will reach critically low numbers. Now, this means that in the near future, they'll have to start buying these barrels back on the market instead, and at some point further down the line, start to actually restore these reserves closer to where they were at the start of the year. And things could be about to get much worse for oil importing countries like America and also many European countries as well. So back in October, OPEC Plus, which is a cartel that consists of the largest oil exporting countries in the world, decided to reduce their production of oil by 2 million barrels a day. Now, this is a significant reduction in oil supply as it accounts for approximately 2% of global oil supply. Now, OPEC Plus holds dominance over global oil supply and includes the 13 OPEC member countries as well as 10 of the world's largest non-OPEC countries. Now, some of the largest oil exporting countries as part of this OPEC Plus cartel does include Saudi Arabia, Russia, Iraq and the UAE. So the 23 nations combined are responsible for exporting over 50% of global oil supply, while also controlling approximately 90% of the world's proven oil reserves. Now, the amount of power that this organisation does have on the global oil supply is quite incredible, and they do have the ability to move the market in whichever way they so choose. So by reducing the number of oil barrels that the OPEC Plus countries are exporting, they are essentially creating a supply shortage and driving the price of oil up, allowing them to get a higher price per barrel sold. Now, this hits countries that import a large percentage of their oil particularly hard, including the US, China, and many European countries like Germany and the UK. Now, rising oil prices also shift power in favour of those countries who are exporting the majority of the oil, as it usually means that they are able to make more money despite selling fewer barrels of oil. Now, it also puts these oil-dependent countries who need to import their oil at the mercy of their exporters, and OPEC Plus can inflict more pain on them by reducing oil supply further, and so the importing countries are more likely to agree to favourable economic conditions and partnerships with OPEC Plus countries to ensure that supply is not reduced even more in the future. As oil prices rise, this harms countries like the US who need to import a large majority of their oil needs, as everything within the country that requires oil does go up in price. Now, cost of production and manufacturing goes up for businesses, and the cost of living also goes up for citizens as well. And both of these things usually lead to government grants and subsidies, which raises government debt as well. Now, rising government debt leads to more bonds being issued, falling bond prices with a higher yield, and ultimately a depreciating home currency due to loss in confidence in the country's economy. Now, this also forms a cycle of negativity that is hard to break out of, because as a currency is depreciating, it makes it more expensive to import goods, services and commodities into the country, like oil, and again contributing to a higher price of oil. The Saudi-Russian partnership remains quite strong despite the Ukraine invasion, and in fact at the start of the conflict, Saudi Arabia's Kingdom Holding Company invested over $500 million in three large Russian companies, Gazprom, Rosneft and Lukoil. Now, this is despite the West doing the complete opposite during this time and pulling out of Russia and punishing Russia with sanctions. Now, the news of the Saudi and Russian-led OPEC Plus cartel announcing oil supply reductions did anger the US, who believe that Saudi Arabia's cooperation with Russia and the rest of OPEC Plus will help Russia to withstand the sanctions that the US and the rest of Europe have implemented on them. So in order to fight back against OPEC Plus and the supply squeeze of oil that they are attempting to enforce on large oil-buying countries, these countries have come up with an anti-OPEC buyers club, and specifically in the US, this includes moving a NOPEC bill to the Senate. Now, NOPEC stands for No Oil Producing and Exporting Cartels, and if this NOPEC bill does successfully pass, then the US could start to punish OPEC Plus members in the form of fines, import tariffs, and also sanctions as well. Now, it could also bar OPEC Plus national oil companies like Aramco and Rosneft access to public financial markets, making it harder for them to raise capital if they need it. Now, the idea behind this movement is to punish OPEC Plus by shifting demand away from these OPEC Plus countries and towards other oil exporters. However, the big problem with this NOPEC bill is that it's likely to hurt the US as well as any other country that joins in with this anti-OPEC Plus movement, as oil would become more expensive, most likely, for these countries, as they would be cutting off a large percentage of the world's oil supply in which they can no longer buy from. If these countries turn to non-OPEC Plus countries in order to buy their oil from, then these oil exporting countries are likely to just put up their prices, and the countries that are importing the oil will most likely be paying more money per barrel of oil. So, if the US and other European countries are so reliant on OPEC Plus for their oil supplies and could be financially crippled if they follow through with the NOPEC movement and are forced to buy more expensive oil from elsewhere, then what makes them think that this plan will actually work? In other words, why would OPEC Plus countries listen to them and start to raise their supply again? Well, Saudi Arabia, one of the main components of the OPEC Plus group, is one of the biggest buyers of arms and weapons and requires a lot of them for their current military operations. Now, if you look at where Saudi Arabia actually imports their arms from, it's actually almost entirely from the US and European countries, which makes them extremely reliant on the US and Europe to keep producing and supplying these weapons for them to buy. As part of the sanctions that the West could impose on Saudi Arabia in their NOPEC movement, they could completely cut off arms exports to Saudi Arabia, which could damage their military ability and national security. Now, Saudi Arabia would also be forced to source these arms from elsewhere, which may be hard for them to actually find the quantity and quality that they were able to get from the US and Europe. The US also has a number of troops within Saudi Arabia, which they could pull out at any point, in order to have a further leverage over Saudi Arabia and OPEC Plus supply policies. Now, Saudi Arabia has a rather small army in terms of troop numbers, so are also quite reliant on the US troops being on foot to help with their military. Aside from oil, another major concern that the US does have is that Saudi Arabia could potentially share US defense technology with Russia. Now, with US troops being stationed in Saudi Arabia right now in order to work with the Saudi armed forces, Saudi Arabia will have gained vital intelligence and knowledge in regards to US defense technology. So these troops are required to be in Saudi Arabia right now to protect Saudi Arabia and in particular the oil fields. However, if the US does withdraw these troops and Saudi Arabia continue to strengthen their relationship and partnership with Russia, then there is a real possibility that US military intelligence does get passed on to Russia. Now, if this was to happen, then it would allow Russia to increase their knowledge on US defense mechanisms, as well as using the technology to increase their own military power as well. Now, given the current geopolitical situation with Russia and Ukraine, and the US clearly taking the side of Ukraine, it would be far from ideal if Russia was to end up strengthening their arsenal as well as their defense as a result of American intel being leaked via the Saudis. All in all, the outlook for the US is looking fairly bleak if Saudi Arabia, Russia and fellow OPEC Plus members continue to get a stranglehold on the global oil supply and drive prices higher with a lower supply. And as mentioned earlier, the US cannot continue to rely on draining their oil reserves forever in order to tackle high oil prices, and at some point in the near future, they're not only going to have to stop taking from this reserve, but also start buying excess barrels of oil to start to replenish this reserve. All of which leads to an upwards pressure on oil prices going forwards, something that all of the oil importers will suffer from, but particularly the US, and could exacerbate the economic problems that they are facing right now, including contributing to a more severe recession. Now, the US is already looking likely to enter a somewhat significant recession in the very near future, and this could have a big impact on the housing market as well. The data is already starting to look pretty bad in the housing market, but if you want to see the full in-depth video that I made on this topic, then you can click the link on the screen right now. I think you'll definitely find it a good watch. Aside from that, leave a like on the video if you enjoyed it, subscribe if you want to see more videos similar to this, and thanks a lot for watching.